Hey guys, this is Trader D. Just wanted to share today's video about the Tesla trade I took. I was not taking many positions. I think Tesla was my only trade today. So let's see. This is what I put. I will be back after 1 p.m. because yeah, I mean usually FOMC days, either the market will consolidate or you will have a quick move before it. So that's pretty much a money burn recipe. And this is the tweet I shared. I think that was what is this is hourly chart of Tesla. Okay. So let's get to Tesla. So this is a daily level. So this was yesterday's close, 919. So I was certainly not interested in the morning. Let's look at the RSI. RSI, as far as daily is concerned, we are in a bullish zone. Let's see on the hourly, we did get into neutral and we started to dip into a zone of it's a neutral zone, so RSI between 40 to 60, that's your neutral. So as I was just watching the market, it did give a bounce. Whenever there is a bounce from this and it is crossing the RSI of 50, that should give you some hope that yes, market might be going up. But if you compare the overall sentiment, it was certainly not conducive for Tesla to go up. And let's see what the levels Tesla made. This is an important level. This is another important level, so 927. So what I was curious was that if 927 is breached, and if it is breached with volume, I will probably take a position. I'll explain why I didn't take that. I took rather a different position. So this was my tweet. Afterwards, look at the hourly, waiting for market. And I took this particular 940 calls. So 940 calls, 7.2 was my entry. This is a 7.8. So 7.2 was my entry. So let's get to a 5-minute chart, which I normally trade. As you can see, the Tesla by that time was in this particular channel. So on a this was hourly one, so you kind of see how the lines a little bit off. There we go. Excuse me. So as you can see, it tried to break, and then the question comes, would you take a short position here? I would not, and the reason is 900 is a psych level. So whenever you are close to that 900 level, and another one would be to just take a bigger picture and see what it did when the 900 was there. So it is a pretty good support, as you can see right there. You can see, at these areas, this is 900, this is 900, this is 900. So 900 would not be an ideal position to take a short. Yes, I wanted a confirmation that yes, 900 level is rejected, then you could go and take a short. So something to keep that in mind. The reason I took this particular trade is somewhere around here. So what I'm looking at is it did breach, Tesla did breach this trend, downtrend. So this was 1125. I was waiting for this to have a retest, but it didn't give a retest. But at that moment I ended up seeing something like this. So you have 1, 2, and 3. So you have an inverted head and shoulder pattern on a 5-minute chart with the retest of that pattern. So when that happened, let me see if I could make some drawings. Let's see. I think probably not using that quite frequently, so I'm missing. Okay, let's look at the pattern. So head and shoulder. So okay, so you can see this is 1, 2nd, and 3rd. So whenever you see that pattern and the retest of that pattern, this is where I actually got excited. So I missed that entry again here. Let me double check what time I took the entry. My entry was, I'm looking at my orders. So that was 12:26 p.m. So that is where I actually took an entry. So 12:26 is somewhere around here. So this is where I actually ended up taking an entry, and this was a level actually made from today's action. So as you can see, this is 9:14, 9:15. So that was my entry, and then I think the contract did go from like 7.2 to, I think it was all the way I think 10 or so, something around that. I think 9.8 or 9.7 was my trailing stop loss. It was a pretty small position, so I really didn't have much. I didn't want it to play huge on a days like this, because overall, if you can see, like market is exhausted. Yes, you can have individual stocks move in the direction, but something I would not bet my money on. Second thing was I took another position at 105. So let's see, 105 is somewhere around here. So 105, yeah, right there. So 105, I took a position, I added to my position, and that is because I took, as I'm entering here, I'm taking my profit. I think I took some profit here, and then this is where I ended up adding some more. So you're pretty much just rinsing and repeating. So I think I had contract, I think 9 point something here, and then I got about, let's say, a little under 8, and my plan was to just kind of sell it within in a matter of like a minute or two, and that's precisely what happened. I think this is where I got stopped out. Frankly speaking, there was no need for me to take it. We all make mistake, and this was certainly one of those mistakes. I would have rather continued all contracts as a trailing stop loss, but yeah, as I said, I don't trust the days like this. And I would like you to practice dynamic trend lines. So as you can see, you have here, and here. So this is a trend line. I'm ignoring these because all I want to do is take multiple wicks into account. So 1, 2, 3, and 4, and a breach of that essentially would be your entry. So that is something to keep in mind. The another thing I wanted you to focus on is this. So let's see, let's get to the hourly chart again. So I am looking at hourly chart for Tesla. The if you have, no, take it back, I think it was a SPY. I took that particular trade. I think I had $2,100 net profit today, and the reason was this. So I'm looking at Spider, and this was, I think, around 2 o'clock or so. That's when I took a position. So my plan was the as this candle was formed. So you're talking about candle, this 1 o'clock candle. As this candle is formed, I'm looking at this level as a resistance. So 427.42. So 1, 2, this is a base right here. This was a rejection in the morning. So 427 as the so you know that this is an important level, 427.3, 427.4. So as the prices did breach, I took a small short position. So 427.3, keep that in mind, and let's get to the 5-minute chart. So 5-minute chart, 427.3. So 427.3 is somewhere around here. And am I making a mistake here? No, yes, I think this was the one. So 427.7. So I knew that level was important, but as it gave me this structure, it gave me this divergence, and this structure was breached. So this is the structure I am referring to. As this particular structure was breached, this is where I actually took a short position right at this particular red candle. And it was a pretty small profit, not I think 400 or 500 bucks or so. But yes, this is something to keep in mind. So let me bring this back. So on the hourly, if you see that this level is rejected, so it's actually 427.69. This is a level you want to, because yes, it is 427.3 is important, but on yesterday and from as far as today's action concerned, 427.6, I think that is a level you want to keep. And as soon as the opening of this particular candle on the hourly candle that is breached, that would be your short entry. Something like this I like to do, and I want to do more and more of these lately, and I would probably be sharing those strategies. Spider is one of the Index I'm not been trading lately. I should be doing it more often, because yes, from the tax standpoint also, these are taxed favorably. I'm not an advisor as far as tax is concerned, but this is something what I have read it. So yeah, do double check on it. But I think the SPY and pretty much all Qs and indexes, if we are trading it, I think they are taxed slightly differently. So make these dynamic trend lines pretty much on a day-to-day basis. So as you can see, prices, so got a rejection, built a morning support, this will be in another line. So I keep doing it pretty much as I am trading. So the breach I'm looking at, and I have multiple time frame into account, so it would be pretty much all three, your hourly, daily, and then, so you don't want to mess, like you don't want to take a short position right at the daily support, right? So you want to avoid that sort of thing. Overall structures, I think still looks pretty weak. Let's see what Tesla daily is doing. So let's get rid of some of these lines, we don't need that. So yep, it's a double top. This is a dark cloud cover. Basically any rejection of this will be shorted down, so that will be a trade for me. So what I'm looking for, essentially a rejection of this particular level. This is an alert I have, 935, because for me this is a range I'm interested in. 940 I'm gonna go long. So a top of your previous high is always a long. Yes, you could be wrong, but that will be one of the most profitable strategy, that yes, people will be shorting at this area, but if it is breached, it is a long. Sometime if you have the RSI going into a bearish scenario, hourly, daily, everything is bearish, in that case you can take as a short position, with your stop loss will be the VIX high. So 943.34 will be your short, and I think that sort of structure pretty much we are seeing everywhere. So if you look in terms of, let's see, Netflix weekly, we still have 1 day left on this one, but yeah, this is like a bearish harami pattern unfolding on Netflix. So overall the market structure and pretty much all the leader stocks, as you can imagine, okay, that would be a breach, and when that happens, this, yep, I think the gap is gone here, yep, so that would be a short. So keep those levels in mind and kind of trade accordingly. Amazon is another one I wanted to see. Yep, that it's kind of consolidating. So 1 2 3 4 5 6 days of consolidation. I'm interested in breach of 140. When that happens, it's a short position for me. So yep, as you can see, RSI is kind of still in a bullish zone, but I think it will take at least a day or 2 or 3. So I'm overall on the larger time frames, my bearish bias is still intact, but obviously we do trade. I personally trade with the bias, because without a bias you would not be able to trade, but I keep my mind open and I let my system guide me. So I look at the RSI hourly, daily, and 10 minutes, 15 minutes, 5 minutes. So if all of that is giving me an indication, I would be kind of trading just like a robot, and I think that's what you should be doing. 174 would be something to keep in mind. That would be for because you can see, I think it was flagging here, and then the flag was broken down. This is a flag, you see, right? So this is essentially a pole. This is entire thing is pole, a flag, and it was broken down. So a rejection right at this. Overall, like, structure is weak. Let's see what hourly RSI is doing. It's already in a bearish zone. 15 minute is already in a bearish zone. So sometimes these smaller time frames will be pulling the bigger time frame. So the overall, if the hourly and a daily is bearish, chances of smaller time frame being bearish will be high. But if your hourly is already bearish and your daily is leaning downwards, chances that you would be going down is pretty high. So yeah, something to keep that in mind. So let me know if have any questions, and certainly I would really appreciate if you can like the videos and put a comments, and it helps me grow, because my only motivation is this. There is no other motivation I have here. So you need to give me something what can keep me on a run. So I do lose motivation pretty quickly, because as I said, I don't have to do this. I make enough money when it comes to my trading. So this is the real support you guys can give me. So yep, and keep doing all these things, right? Yep, those are the important ones too. Always do these structuring of the charts. So All right, guys. Thank you. Good night.